In regards to that 8th rate rise, I was at the Reserve Bank for the decision this afternoon and caught up with St George Bank Chief Economist Besa, Deda, and here's a bit of what she had to say.
It's bang on expectations. We expected they'll lift by 25 basis points to 3.1%, and that's what they delivered. There's now a natural pause in January because the RBA do not meet. We then expect them to follow up with another rate hike in February and potentially take the cash rate up to as high as 3.85%. But a lot will depend on developments with wages growth and also with the labour market.
Reserve Bank Governor has talked about a wage price spiral. How significant would that be for Australia's economy if that were to happen?
Well, it would mean that inflation would be a lot harder to bring down, and certainly we can see signs that wages growth is picking up in the latest set of numbers. So the RBA will be eyeing that very carefully for what it means for the inflation outlook. The unemployment rate dropped in the latest reading to a near 50-year low, so they'll also be watching that very carefully. But there are some early signs now emerging that consumer spending growth is slowing. There's probably a last dash with the Black Friday, Cyber Monday sales, but I expect that some of that would have been a pull forward effect, and we'll see some weaker numbers come through over 2023.
Yeah, do you still expect inflation to peak at about 8% in the end of this month?
Yes, we think the peak will be this current quarter, and it'll be close to 8.1% in the current quarter, and then gradually roll over 2023. But given that inflation's likely to stay elevated all the same and above the Reserve Bank's target, it means that the Reserve Bank doesn't have a lot of wiggle room, and therefore more tightening is to be expected. And in today's decision, the RBA in its statement did flag that more interest rate hikes are still likely.
The Federal Reserve is meeting next week, and in January, cash rate in America could be at 5% by the end of January. Is there a risk Australia could be left behind here by other central bank movements around the world?
Yes, there's a very high chance that the Federal Reserve will take their cash rate to 5%. And the RBA has to keep an eye on what other central banks are doing, because the difference between our interest rates and that of interest rates in other economies has a bearing on the Australian dollar's value against the currency of those economies. And of course, that then can influence the price that we pay for imported goods and services, and that feeds into overall inflation. But I don't think the RBA will be taking the cash rate up towards 5%. Whilst there are a lot of similarities with the inflation story in Australia with the rest of the world or key economies like the US and Europe, I think there are also some important differences. And one of those differences is that Australian households are carrying much higher debt levels, and so each step of monetary policy has more bite to it.
Tomorrow, the GDP numbers for September quarter will be released. What are your expectations for economic growth?
Look, we're still looking for a reasonable outcome for economic growth. So even though there's likely to be some signs in those numbers of some emerging slowing coming through to the economy, we still think there'll be a fairly robust set of numbers, particularly in terms of annual growth coming through. Domestic demand still likely to be pretty robust, including business investment in those set of numbers. But then in the next quarter, you're likely to see more evidence of a slowing. And then over next year, for 2023, we do think economic growth will be very weak at about 1%.
And is that exactly when the rest of the world is expecting a global recession?
Well, there is a good chance that we do see global growth continue to shift lower, and in particular some major economies like the US and Europe experience a hard landing. But then that'll probably make the RBA's job a bit easier in terms of trying to bring down inflation, because we go into 2023 with global growth slowing and possibly demand pressures and inflation pressures easing around the world, which just means perhaps the RBA won't have to take the cash rate as high.
Besa, Deda from St George Bank, thanks so much for your time.
Thank you so much, Ed.
Well, as Besa, Deda says there, that rate decision shows the resolve of the RBA to quell inflation. There was no backing off in its language or indeed its tone.